Let us know. All right.
All right,
Just
there we
feeling
go. We're
the
live.
live stream now. All right, let's do this again, guys. Good morning.
Good
Hey, good
morning.
morning,
Happy
everybody.
Monday.
Happy Monday. Happy
Happy
Monday.
Monday
How's
Monday.
everybody
night.
weekend? Everybody had a great weekend?
Great
It was
weekend.
good.
Good. Team
Awesome.
Benito.
Team
Awesome.
Benito.
Awesome.
Yes.
Oh, there we go.
Yes.
Amazing weekend. I know we had tons of fun. There was a lot of us, including myself, up and running till a little late. So here I am, ready to go for the week. Want to thank everybody for joining us. We have so much to celebrate besides the Super Bowl, which I normally don't watch the Super Bowl. The halftime show was something that I enjoyed a lot. Um, we want to thank everyone on this call that was participate on our award ceremony, guys. That was amazing. We had so much fun, so much, being able to come for you guys to see you, to come on stage, be able to receive your awards. I know we are waiting for our professional photos and videos, so we're going to be sharing those with you very soon. So stay tuned. We're gonna have all those marketing material ready for you guys to be sharing your social media. But congratulations to everyone who got an award. We really
Yes.
grateful also for all the
Congratulations.
sponsors too who make this event happen, and a great teamwork. That's what it makes a dream team. Is that there's no I in our team, right? If you
No.
think about it, it's all us. So we had, want to big shout out to, of course, the Evolution Network English team that we work on this for months behind the scene to be able to put this together. Thank you also to Jomida and Patricia who helped us out as well. So everybody who put in into making this amazing night, we want to really, really thank you. We were like, honestly, one point I look around and I saw so many people standing. I'm like, oh my God, next year we need a bigger space to be able to
Yeah.
celebrate you guys.
I'm
So
working on it.
working on it. Cheryl, start working on that, please. Couple announcement, guys, for this week. And this month actually, we have classes in each of the offices. So I know Premier has a class about taxes this Wednesday. So if you not have filled your taxes yet and have questions about what can you claim, what cannot be claimed as a realtor, this is a class that you do not want to miss. And on Thursday, we also have a class at NONAD, and this is an amazing class as well, learning about insurance claim. What happened when you have a water damage? What happened when you have any type of damage and how do you claim that correctly? Cesar, what do you have in Orlando?
Well, for this week, we started back up Contracts Lab on Wednesdays, 9 a.m. at via Zoom. So that's going to be going on Wednesday at 9 a.m. As I mentioned, account you can log in through there, and it's a great class to kind of go over the. I go step by step on the contract. That way, everybody knows what to look out for and what are the things that you should be paying attention to while you're when you are explaining the contract to the client. Even though we're not lawyers, we're not there to explain, but we're there to help them understand what they're signing at least. So 9 a.m. Contracts Lab.
Awesome. And as we assume, so great for everybody to be able to participate that. Cheryl, talk to us about your grand opening.
Yeah, so now we're focusing 100% in that because our all eyes was on the work. So now it's gonna be in February 25th. Please put it in your calendar. It start at 5 p.m. We're gonna have open bar, guys. We're gonna have open bar, no tickets, just open bar. We're gonna have a taco bar. We're
That's
gonna have
dangerous.
live music. We're
Yes.
gonna have the blowing machine. That's gonna be so exciting. We're bringing agents from all the offices, so I took the time to invite all the realtor who lives in the area to invite them to the event. We're doing ads, so that's a perfect time for you to know other agent from other area, maybe growth your downline and network with all the people that will be there. We're gonna also have some sponsors that's gonna be helping us as well, and you're gonna be able to meet with them. We're gonna have a lot of raffle because I want everybody who gets there to enjoy and maybe to win something just for being there and being present. So we're also gonna have a raffle for two Orlando Magic tickets. So it's gonna be amazing. Please, if you haven't registered, do it. Do it. We really want to have a head count, and we want to know that we can count on you. All right.
Again, put that on your calendar. That's
I
on
forgot
the
something too. I forgot something for Orlando for Thursday and Friday. Thursday we have the How to Sell International Real Estate. We have a team here that they're heavily involved in the connections within South America, and they want to show how to sell new construction for international buyers. And then also on Friday we have the short sale classes. Well, I forgot about that. I was just checking, making sure I didn't forget.
Yes, that's and that's with the short sale classes with Wanda and team.
Yes, that's the trio. The trio.
Dynamic. Awesome. Eric, Wanda, and Jorge. As I mean, and let me tell you guys, this is a team effort. So if you guys have a class or some type of subject that you excel on it, just step it up and let us know, and then we can put you on the calendar and be able to teach at classes. Wanda, Jorge, and Eric are from the Lake Nona office, and now they are teaching the short sale skill throughout the company. So great way to be able to gain knowledge and be able to give back a little bit as well. All right, guys. So we are ready for Mindset Monday. Cesar, what do we have? I heard we have a special guest.
Yes, we have a special guest. I mean, we have Miss Carolina de la Torres from Quantum Funding. How you doing, Carolina?
Good morning. Good morning.
Good
I have
morning,
the
Carolina.
flu, I think, but hopefully you guys are able to understand me today. But thank you for
Good.
inviting me.
Well,
Good
glad to have you here.
morning.
Glad to have you. I mean, this is a continuation. She was one of our exclusive sponsors at the event, at the award ceremony we have. So we want to continue making sure that everybody's hearing what she has to say, because she definitely has a great team and a lot of programs, a lot of things that can help you make more money. So today's topic is all about the money conversation. It's more practical today. And today's Mindset Monday is a more practical application, I would say, because the thing is that sometimes us as agents feel a little uncomfortable talking about the money, and it's not because we're afraid or anything like that. Sometimes it could be just with lack of understanding of what the money conversation is with the buyers. Sometimes that conversation can feel very technical, very heavy with certain buyers, because a lot of buyers, most buyers are not afraid of a house. They're mostly afraid of what? Of the payment. And sometimes buyers don't really understand how they get to that amount, how they get to those numbers. And sometimes what happens is they're afraid of making mistakes, most buyers. And that's why we're here. That's why we have to make sure that, us as professionals, we are fully understanding and comfortable having having that money talk or that money conversation with each buyer, because the whole thing is that if that part is confusing for the buyers, then most likely your clients are going to hesitate all the time if they are confused, or they're going to hesitate when they're confused. So that's something that we want to make sure that we have a good understanding, and who better here to help us talk about the money conversation than a lender directly. That way it makes it much easier for us to feel more comfortable with that, mastering that point, that part of the conversation, so we can have better conversations with the buyers, create better expectations for them, and be able to guide them in the right direction. That way they feel confident, they trust you, they feel clear, calm, and they're able to make the decision, not hesitate when we start talking about that specific topic. So, Carolina, some of the talking points that we had today were, one is complicated. Complication creates fear when it comes to numbers. Our role when it comes to the bank and dealing with the money conversation as agents as well. The clarity that we need to have in regards to the beginning process, especially when especially first time home buyers, or people that not very familiar with the process, especially the lending process, which that's like the most important part. And also how to have strong conversations with these clients when it comes to the money talk. So, Carolina, I have the floor on you now.
Welcome,
Well,
welcome.
thank you. Thank you. And you guys are superstars. So I'm pretty sure what I'm going to say is really nothing new. But when we buy something, it's always emotional, right? It's an emotional purchase that we're doing. And as a realtor or as a lender, we want to be able to first kind of understand why the client wants a home, right? Is it because they're going to start a family? Is it because they already have a family? They're looking for good schools? because they're getting divorced? Is it because, they just want a better neighborhood? We need to find out what's the emotional connection, because it's going to help us transition into the money part, right? So something that I heard, I guess a couple of months now, and I thought of it as, you know what, this is a really good way to have the money conversation with the client, and for the client not to feel like, oh my God, they're going to know how much money I have and they're going to take it all away from me, right? The bank is always going to take my money. No. So it's about asking the client, with how much have you prepared yourself for this purchase, rather than how much money you have in the bank, right? Just how much have you prepared yourself? And then the client is going to enter into a different mindset. It's like, you know what? I have not really prepared myself, or, oh, I prepare myself with, this much, instead of, how much money you have in the bank. Because when you ask like that, they're going to be thinking, oh my God, if I tell them everything that I have, then, they're just going to take my money. So it's always how we frame the conversation. And when the client is a little hesitant about the money side, you can always go back to the emotional piece. You mentioned to me that, you really want a house because, you're going to start raising your family. I want to make sure that I get you into the best home. So that's the reason why I need to know how much have you prepared yourself with.
I got a question,
And
Carolina.
yes.
Sorry. Why do sometimes it feels like clients or consumers or buyers or whatever how you want to call them, they get so hesitant when it comes to when you start asking for banks that they sometimes they want to omit stuff. What stuff came to mind when you were talking, like they love omitting bank accounts, like, okay, let me omit this, let me omit that, let me not give this just in case or whatever. Why is that mentality so like that? And what can we do to help them overcome all that?
Well, one of the things that I do is I talk to the client about, okay, so for example, right now you have credit cards, right? What's the interest rate on your credit cards? Oh, 15, 18, 23%, 28%. Okay, so you're using the bank's money to make purchases and the rate is pretty high. When you're trying to buy your house, the bank is actually your partner, right? And the bank is only asking for 6, 7, 5, 4% in return for giving you thousands and thousands of dollars. So because the bank is taking all of the risk for you, they need to make sure that you're going to be able to pay your home, and that they're actually by law are giving you something you're able to afford. So we're always going to ask for bank statements, for all of these things to get a clear picture. And I tell my clients, as a loan officer, I'm your best friend, right? You have to tell me everything, because my job is to make sure that I structure everything correctly. So once you get into contract, it's smooth sailing. You can close on time, you can have your home. Let me take care of all the hurdle. Let me take care of all the things that might get your loan in trouble. You gotta be straightforward with me, and I'll take care of the rest for you. So trust me. And I tell them, if you have to pay child support, let me know. If you're married and you don't want your spouse to be, on the loan or on title, let me know these things, because I had clients who omitted information about being married.
Wow.
And all of a
Wow.
sudden it comes up. Oh, it's just we're kind of like getting divorced, and I didn't want this person to be at the end. Like, don't do that, right? So, I try to tell my clients, be completely honest with me, because I'm gonna make sure that I fix everything for you and have it the way you want. But if you lie to me, then it's gonna be hard for me to, in the middle of that transaction, try to help you. So, but your question is correct. Some people, they like to omit, but the bank, you don't want to think of the bank as your friend, but definitely as your business partner. And when you have a business partner, the more clear upfront you are with the business, the better, relationship you're going to have with your business partner. So that's what we are for the realtor and for the borrowers, is we are your business partner.
Thank you, Carolina, for that. A quick question that came to my mind too is like, how do we determine to pass this client to the lender? So we have, we're going through our list. We make those phone calls, we connect, but I feel like sometimes we are kind of don't know what to ask to see if this client will be able to make it to the next phase, which is going to be, okay, now I need you to talk to the lender, because I'm pretty sure not everybody you talk to qualifies. There's going to be a high percentage that don't qualify. And I know for myself, I like to make sure that when I pass that client to the lender, I already ask basic questions at least to kind of determine whether they're ready or not. What would you say that will be like the question to ask now?
Okay, so when it comes to realtors, you have different levels. Okay, so when you are brand new or you don't have, a lot of transactions, a lot of experience, I tell my realtors, you need to find a loan officer and be straightforward with your loan officer. Hey, I'm new. I'm learning. This is the way I like to work. How do you like to work? And let's start creating a partnership that, is going to help us grow our relationship, realtor and loan officer. The basic questions is always to ask the client a little bit of their financial situation. So, for example, are you currently working? Are you independent? Do you own your own business, or are you W-2? It's basic questions, but as a loan officer, that's going to help us out a lot. If you know that the person is independent, be ready to ask for taxes, right? If you are W-2, be ready to ask for pay stubs. As a realtor, you don't really have to, unless you are now a realtor with, more experience and you want to find out if you're wasting your time with the client or not. But as a loan officer, when you call me, I would like to know a little bit of information. So when I have that phone call with the client, it's more like a warm call and not a cold call. So if you give me a little bit of the backstory of, first of all, the reason why the client wants to buy this house, is it a primary home or an investment property? Is the person independent or is a W-2? And if the person is independent, how do they feel about their taxes? Do they feel like they did good taxes, or do they feel like, they put a lot of deductions? And their credit, if they feel they have good credit or not such good credit. Those basic questions is going to help us as loan officers kind of be able to see, okay, where can I put this person? Quantum funding, like I mentioned on the award ceremony, I built this company to say more yes than no. So we have so many programs, so many products that we can actually help the client get into a house. So it's not black and white. So the client might have bad credit, but really good money saved to buy the house. We can actually help them. We have partners that help build credit, and we can build credit in less than 30 days and get them into a home. So I don't want any realtor to play the role of a loan officer and disqualify a client. Just get a backstory and bring that to a loan officer, and I'm pretty sure most likely we're going to be able to help that client.
Awesome. Thank you for that info. We have Magda and Norma.
Yes. Yes, Carolina, that's why we need like a good partnership with the lender. That way we don't lose clients. And sometimes we see clients that they are hesitate giving you some information. Usually they give you everything. If you get that report, they get so comfortable and give you everything. But sometimes if you see them that they don't want to give you some information, they hesitate, they don't feel comfortable. That's why it's better to have that conversation and say, hey, we have a lender. Usually we don't have the information, the financial information that's private. They do their own thing, and I do my part, and I explain what I'm doing, because sometimes, like, if co-workers, or if you have some friends that they don't want you to know their financial struggles or situation, they don't want to say, and it's better to explain them. That way they give you the business. Hey, it's different a role. They have the financial role and I have this role. I'm going to look for the house. I'm going to, guide you. But sometimes it's better to explain. That way they don't go to somebody else because they don't want you to know their financial situation.
And that happens a lot, Magda. And thank you for bringing that up. I'm pretty sure you say that a lot as well, Caroline, that where it's friends and family, they're sometimes try to take the business somewhere else because they don't want to, your whole life to be out there.
Mm-hmm.
It's true. But again, when you talk to a client, it's always bring it back to that emotion, why they're trying to do what they want to do, right? Why they're trying to buy this house. And I tell my client, right now I'm your business partner. So my job is to make sure that I give you all the options, and not just the options, the best options for you. So the more I know about your finances, the more I know of what it is that you want, the more options I can give you. So that way you can accomplish the money side, having a low monthly payment and the right rate. So always think of me as, again, your business partner. Be open with me. Let me know everything so that I can give you the best that I have.
I like the way you frame it with the business partner part, because when you said earlier, the bank's not your friend, but you're your business, I guess, partner, your business associate or whatever. I don't remember exactly if it was business associate, but I know you said the bank is not your friend, but still is a partner and is a partner. Because the whole thing is that sometimes like we overcomplicate it, we overcomplicate things as agents, and if we can start the conversation with that expectation that they're not your friend, we're business partners, then that is something that is a whole different mental framework, because of the fact that when we're thinking it from that standpoint, there's some clear guidelines and rules in regards to how we're going to manage our business partnership. We don't disclose everything, every single thing, I guess, as a business partners, but you go off what the lenders is requesting, and not adding anything extra to it. That way it doesn't open can of worms or stuff that we don't need to be opening in certain situations. And I also think sometimes that when we start over explaining or just going over and over and over and over, it just creates that confusion sometimes, because when we start over explaining, the clients get confused, and we have to be careful when we're over explaining, and really keep it simple and clear. That way people have a clear understanding of the process.
Yeah, you're right. We're not a bank, so we got to be careful on that fine line. We're not a bank. Norma.
Carolina, when we have clients overseas, like investors, how we handle that when I know the cash buyer, they need to have a bank account here in United States. This is the first question. When they need put like a 50% down and then 50% loan, how that works, how I can, what question I need to ask to do that kind of loan, how you can help me.
Okay, so I guess for me, when I have my realtors that they focus on international buyers, what I want to know, first of all, if the person has a visa and is able to come to the US, because I do have banks that you can close remotely. They don't have to be here. But if I know that the person is able to come and it's okay, then I have more options for the client. The bank account, the same thing. Do they have one here? Because it's not required, not all the lenders require for the money to be here. So those are great questions, because it's going to help me see, okay, which bank with what program goes with that client. So, but it doesn't mean that if they don't have a bank account, they cannot buy. Not true. Doesn't mean that if they don't have a visa, they can buy. Not true. But it's good to know. So with international buyers, they're about numbers. And one of the things that it's good for the realtor to know is that in other countries, financing can be completely different from here. So don't be afraid of having, conversations, because for you might be something that, oh my God, I wouldn't do it like that, but in other countries, that's the way it gets done. For example, a lot of international buyers, especially from Canada and South America, they're so used to having a short-term loan, meaning maybe the rate is locked for 3 years, 5 years, 7 years, and then it's variable. So for a person here in the US, you're thinking back 2008, oh my God, I don't want to have a variable rate. I want a 30-year fix. I want that security. I don't like those type of loans. But for people in other countries, that's the norm. And a lot of foreign nationals, when they buy, they don't expect to have a long-term mortgage, honestly. They want to pay it off actually rather quick. So those type of loans, that's something that they love and they're used to. So as loan officers, it also helps us because we have a wide range to provide options for the clients that are international. But yeah, always ask. The main thing for me as a loan officer, do you have a visa? You're able to come to the US? Do you have a US bank account? And the rest, I'll take care of the rest.
I'm glad you mentioned that because like I feel with international, or you mentioned international, what was coming to mind is that you got to have a whole different mentality when it comes to them. It's a completely different mentality because I've noticed that a lot of the investors, a lot of the people I've worked with personally, I'm saying investors that I've worked with personally is they're concerned about cap rates, they're looking at the ROI, all this other stuff, and sometimes with the international buyers, there are so many other factors that affect, or there are so many other factors that contribute to the reasons why they're buying, and it's not always necessarily cap rate. It's not always necessarily a good return on a monthly basis. It's just sometimes could be them pulling money out of their country, or just simply putting their money somewhere to be more protected versus where their country's at. So it's a mental switch that I've been trying to learn how to like completely change it. Because when I do the numbers, I'm like, this house doesn't work. So why we're doing this, And it's something that with international buyers, I feel like you have to make that switch to that way it's a whole different reason why they're buying. That way we can have the right message to them, because if not, then it's not gonna match. It's not gonna match the message, and it's gonna create confusion. It's gonna create not no trust, and it's gonna create something that they're not gonna call you because we're not talking the same language.
That's true. That's true. And Carla, I
Exactly.
have a question for you. Based on 2025, which I'm pretty sure was an amazing year because we're looking at the numbers and homes still selling, the buyers still out there. But what was that number one loan or that you saw that I'm like, wow, everybody's going for that? It was more FHA, VA, or conventional. Like, what was that sweet spot so we know what to promote, or how to be able to talk to our clients?
Okay, so there is this loan. It's an FHA. It's called VOE, so Verification of Employment. It's a loan that does not require tax returns for us. It's basically verification of employer that we do with your employer. So we send a verification, a document that the employer, fills it out, and that's all we use for income. And we have something similar for the client that is also independent, which is the profit and loss, but it's also with a 3.5% down. So those loans, we were doing them, and we still are, pretty high. They are considered FHA, so the rate is pretty amazing. The down payment is super low compared to your non-QM. Usually, primary home starts at 10% down.
Mhm.
So a lot of realtors took advantage of those programs. But if you want more information about those programs, just give me a call. Yeah, because they are amazing, but very specific. But that's something that I prefer to talk one-on-one with
One-on-one,
the
right.
realtor on how they actually work.
And another question I have for you, what is the one mistake that we make as a realtor in terms of when we are talking to our client that you saw last year, said, man, if they didn't say that, we shouldn't say that to the client, it would have probably saved the deal. I mean, because sometimes I feel like that we can kill the deal too.
Yeah.
By certain things that we do or say, or we pretend to be a bank when we're not, we pretend to be a appraiser when we're not. So there's a lot of little things that goes into a transaction. So what we think is a one mistake we should be wear off and not do.
I think that goes for everybody, including my loan officers. So the main mistake that I feel that people in our industry do is that we feel that our situation is the buyer situation, and the conversation that we have with money is the same conversation that the borrower has with money. And when we don't mimic the client, but we actually try the client to see our point of view, it kills everything, right? And I see that a lot, especially with realtors that they don't even own a home. So they're not even homeowners and they're trying to get a client to become homeowners. So the same hesitation that they have, or the example. I have realtors that they don't own a home, right? They are brand new to real estate. They're trying to make it, so they're struggling financially. So when they're dealing with the client, they already, are trying to think, or let's get this client with down payment assistance. Let's give them, all the closing calls. Because the conversation with the money is that there is not enough. And they translate that to the client as well. And then the realtor ends up giving, part of their commission because the money conversation is not there, right? And that's not the case. I had a lot of clients that they tell the realtor, yes, I have no money, because the realtor from the beginning said, don't worry about it. I'm going to get you the down payment, and we're going to work on those closing calls. We're going to get you everything. So the client's mindset is, you're going to get me everything. And then let's say the bank is now requesting 6 months of reserves. The client's like, oh no, I don't have money. If you don't help me, I'm not gonna do this deal. So the realtor then gives part of their commission, and then come to find out the client does have the money, right? They do have it. They were able to come up with it, but you already put that mindset that you're gonna provide everything. So again, our conversation that we have with money, we need to make sure that we don't put that into the client's also mind. Our insecurities, it's ours, it's not the client's. If we wouldn't buy this house, doesn't mean that the client doesn't have another vision to buy the house. So let's just not get in the way. Let's just let the client decide what they want to do, how they want to do it. We're here to guide them, not to, tell them this is what you have to do. Just guide them, let them make the choice that they want for their future, for their family. So
yeah, Carolina, that's very important, because sometimes we think with our packets, and it's not our situation. And it is funny, because just last week happens to me. I sit down with a friend, and it's going to be an investment property. And I talking to her, we gotta check how much it's gonna be. And I was thinking, like a property paying $5,000, I don't think that is gonna work for her. I know she makes good money, but for an investment, I was thinking something with not that monthly payments, because for our next investment, I don't want something like that. So, and I told her, I was talking, and she I feel very comfortable paying $5,000 monthly. And I oh my gosh, I was thinking, with my thoughts, and it's not about her. She's okay paying $5,000, but I was thinking no. So that's why we gotta be careful, not thinking with our mindset, our packets, or what we think.
Open your own package.
Leaving and they can save now. So
I learned that.
We gotta be mindful with that.
Yeah, thank you for sharing. I learned that early stage on working on sale and retail. That was the first thing, that mindset we had to switch up. It's like not to show up your own package. Sometimes somebody will come in and say they want X amount of products. And I was like, well, I can show you the Sephora brand, which is cheaper, instead of the Dior, that's 3 times more. And I'm like, hold on. No, I'm not here for that. I'm here, to switch the mindset and be able to help the clients. So thank you for sharing that. That's definitely something very common, very, very common.
Yes.
Cheryl.
Carolina, do you know that there's a fine line between when before we send the client to you guys, we ask them some questions, and
Mhm.
sometimes you guys want us to ask those questions, so we don't send you the people that they're not actually ready yet. But
Mhm.
that line between but what happened if, for example, let me give you an example. Like if they tell you, oh, you know what? I'm gonna wait until I get there so I can they're like out of state, like what we're talking, right? They leave out of state, they want to move to Florida, and they're like, you know what? I wanna buy a house right now, but I'm gonna wait until I get there to purchase my house. But if we don't know, we just wait for them to get here. But if we actually talk to you, maybe there's option that they can do, maybe just getting a transfer from their work and you can work with that work letter, things like that. What would you say is the perfect moment to send it to you? For example, if you
Mhm.
see that they have this credit, this they're working, they have this, it's a good moment to send it to us. Or vice versa. If you see they don't have this, it's better to tell them that they need to work on those things first and then send it my way. Do you get the idea? I know it's
Yes. Yeah, yeah. So, for example, who is the best client? The best client in reality for me is someone that, has good credit and has some money saved, right? And I told my, because I get a lot of questions from my clients, and is this the right time to buy? And I said, it's always the right time to buy when you have the credit and the money. You want to take advantage of that because it's easier to refinance when rates drop than try to buy a house when rates drop, right? There's just so much competition, from buyers when the rates, which happened during the pandemic, right? It was crazy how many offers the sellers were getting. Houses were being purchased 20, 30, $50,000 above asking price. And people are asking, oh, but the houses are dropping now in value, but it's not really they're dropping in value. It's that before they were upselling, oh my goodness,
Yeah.
crazy amounts, and now it's kind of getting back to normal. So for me, the client, it's good, when they have decent credit and when they have some money saved. However, if they don't have good credit, doesn't mean that we're going to turn them away, right? Let's work on the plan. And if they don't have enough money, let's also work on a plan. So I don't think it's good to turn the client away. But I will say if the client is the type of client that they don't want to have a really a decent mortgage, right? They want to have a mortgage of like $1,500, $1,800 a month, but they don't want to give down payment and their credit is a mess. Okay, we really need to restructure if buying a property it's really what you want. Maybe you're just a renter forever. That's where you stay. Um, but there's so many options for clients. So that's why I'm not the type of loan officer that I want the realtor to ask a specific questions and then make a decision and turn the client away. Especially if the client really wants to become a homeowner, let's help them, right? I have business owners and they're like, for example, for non-QMs, they got to come up with 10% down. Or maybe they want to do a conventional and they feel that they don't have enough. I said, okay, what type of business do you have? How can you, in the next 3 months, bump up your sales from your business? What can we do? Let's work on a business plan. I go that far with my client. I try to change their mindset. It's not about I don't have enough. It's about, okay, so what I have to do to be able to afford it, right? That's always my conversation. It's never that is too expensive. It is not expensive. You currently don't have the money. So let's work on how we're going to get you to see that, that's not expensive and now you're able to afford it. So, Wanda, you have a question?
Yes. How would you? Well, I have a comment and a question. Last night we were at the Super Bowl and we had this couple, right? And they talking to another person, another girl that wanted to buy a house, but she's not ready yet, or or she's thinking about a year or so. And I was talking to her, and all of a sudden, her friend is like, no, it's right now the interest rates are so high, the interest rate thing. And before I said, yes, but when you bought your house, because you already bought the house, when you bought your house, the interest rates were low, but the prices were going crazy. So you had a battle. Either you have to look into it. Prices are, interest rates are low, and prices goes, high. That's why interest rates right now are, in this situation, because now prices are getting stable. So, but that's, my comment, that's a lot of, I see that a lot about people talking about the interest rates and how high they are. On another note, what do you say will be a good thing, talking to another client that I met at an open house, and, looking, she was a renter, and, I contacted her and tried to get her into buy the home, and she's like, well, no, her last email was like, no, I will, talking about my husband, and we are not ready yet to buy, a house. And what would you say it will be like a good, come back to that? Like, what would you
So
say?
what makes you think that you're not ready? Right?
Yeah,
It's
yeah.
the main question. The main question is, what makes you think that you're not ready? Because again, the realtor is a licensed professional that is gonna go there and look for the house and knows, the neighborhood, and it's gonna get them what they want emotionally. And the loan officer is the one that is gonna see their financials and the credit, and they're gonna help you decide which program is the best for you. But the client is not a realtor, is not a loan officer. So what is it that they think that they cannot buy the house right now, right? A lot of people think that, oh my God, in order to buy a house, I need to have a whole bunch of money, or I need, credit score of 700, or, they just have this insecurities and the idea of what it is, the process of becoming a homeowner, and they just feel that they're not ready. But we have to ask them, what makes you think that you're not ready? Right? If they say, oh, my credit is not great, have you checked your credit? I have partners that, we help clients build their credit. If they don't have credit, or, sometimes it's quick things that you just have to do to make that credit work, right? Is it the money? Okay, but tell me more about the money. Do you have a 401k? Some people, they do have a 401k. They don't think that they can use it to buy a house. I think it's only for retirement, right? So always ask. And when it comes to the interest rate, like I mentioned before, credit cards, the rates are super, super high. And I tell my clients, right? So the bank is your partner. Which partner is going to give you thousands and thousands and thousands of dollars? Is going to assume all the risk for a return of 4, 5, 6% interest. If you were a person with that kind of money and a friend comes to you and says, can you give me $300,000? What would you say to that friend? Oh, yes, here you go. Right? No, we're going to be thinking, okay, can this friend really pay me back? Is this person really, is she holding a job? And if I'm going to lend her all this money, what am I going to get in return? So that's the way the bank thinks. The bank is always about mitigating risk. It's not about taking people's money. It's about, okay, if I'm going to take all this risk, depending on how much risk I'm taking, I'm going to give you a rate, right? The more risk I take, the higher the rate is going to be, right? So it's all about risk. And if you have a partner that is going to give you 96.5% of whatever it is that you're going to buy and only ask for 4, 5, 6% in return, that's amazing. you don't, no other partner is going to do that for you, right? So
Right.
that's how I changed the mindset also for the client when it comes to how they see the bank. We're not here to take your money, right? We're not here to take the house. The bank is never in the business of keeping the house, because some people say, well, the bank is, they own the house, they can take the house away from me. I said, that's insane, because they cost the bank so much money to actually take your home, right? They have to go, they have to pay lawyers, they still have to pay realtors, they have to pay for electricity so they can do the showings, money that they don't want to spend. They just want to give you the money and earn something back. They're not in the business of keeping, taking your home away. So
I love you mentioned
again,
that. I love you mentioned that because the question, that question, the one that I asked, a lot of people feel that a lot of people kind of um deal with that on a daily basis. I'm not ready to buy. And going back to like the core points that we were talking about earlier, is all about understanding kind of the clarity and being aware of their situation, of the problem. Because sometimes they just don't know, and it's completely okay to let them know that, that most people feel that way. That way it helps them bring down that level of guard. That brings most people feel that way. And that follow-up question you asked, what right now makes you feel that you're not ready right now? What's going on? That way to see if they open up. And then from there you can kind of address their concerns, as long as you build enough trust and clarity, trust and confidence with them, that they can open up with you in that tone, in that manner. So I
And
love that.
allow the lender to determine whether they're not
Mhm.
ready or not.
exactly.
Yeah.
It's our job.
It's not
And,
like we're not a doctor here to diagnose ourselves. So we go to the doctor and they give the diagnosis. So let the lender give you the diagnosis.
yes. And then when it comes to the rates, also, what I tell my clients is, when it comes to mortgages, the client, the borrower, is actually dating the bank, right? They're not marrying the bank. Yes, they have a 30-year, contract, but that 30-year, the only one that cannot change it is the bank. The bank cannot come back to you and say, you know what, I don't like you now. That's it. We're going to change the terms of that mortgage. But the borrower is able to change it at any time, and that's called refinancing, right? So if along the way rates drop, you can always refinance your house and take advantage of that lower rate. And when you do a regular FHA or conventional, there is a thing called streamline refinancing. So, before you have to complete 3 years with your mortgage, you can actually drop your rate and you don't have to give any employment documentation, nothing, nothing at all. All you just have to do is just keep, 640 possible, your credit score, and not miss payments. That's it. And you can just tell the bank, and they actually send you offers, right, to lower your rate. And you don't have to go through the whole deal, or like, you did when you did a purchase. So I always tell my clients, you're dating the bank, you're dating the rate. You can always change the rate. So don't feel that you're stuck with a mortgage for 30 years. No, you can always, change it and have that peace of mind. But hey, at least you stop paying rent and you're getting into the home that you want today. So let's not wait, because that house might not be available tomorrow. Let's
Right.
take advantage today that you have the credit, you have the money, and then we take care of the rate along the way. So
Awesome.
I
I
hope
love
I
it.
can
Thank
Carolina,
you.
for the house.
I'm sorry.
Oh.
Excellent, Carolina. Date the rate, but marry the house.
That's what I
More
said. Marry
time.
the house.
Date the rate, but marry the house. And I'll leave here in a second. Thank you for mentioning to everybody here that the bank does not want your house. They don't want it. They don't want it. That's the last resort. All those expenses involved. So see you at the short sale class on Friday.
Well, Carolina, thank you. I mean, it's been a super pleasure again, like always, to
Was
have you on the
amazing,
call,
Carolina.
and be able
thank
to,
you.
Really
share your
was.
knowledge and share everything that you guys have to offer. Just really, I want to recap really quick. That way, things that we learned today is, don't overcomplicate stuff. Do not overcomplicate things. Don't overanalyze, don't over explain. If you're unsure about the process, connect with a lender. It's super important to understand that the bank, like the way Carolina mentioned, the bank is our business partner. Okay, we have to work with them, and the more we communicate with them, the better they're equipped to be able to find something for your client or your consumer to be able to fit their needs. So it's super important. Clarity is another big one that was spoken today as well. Especially that's why all as agents and realtors, we should be doing our buyer presentation, because during the buyer presentation, that's where we can establish all of this. That we can have those strong conversations about money. We can have the clarity. We can build the trust and the confidence with that consumer. Because sometimes the consumer is just looking for someone that has the confidence to push him over the edge, because they don't have the confidence to go over the edge. So that's something that is very important to do while you're doing at the presentation. At the presentation is super extra important to do. Don't skip on that. And I always recommend that you as agents connect with a lender, connect with them beforehand, and kind of discuss with them how they work, what programs they have, what are the things that they're known for. That way it's easier. That way, when it's not a cold transition, because you know more about the lender in those situations. So it's very important that you set meetings with your lender. And Carolina, if you could share your contact information on the chat, that way if anybody wants to reach you.
Yes,
Um,
I'm gonna put that in the chat right now. But I also wanna let the realtors know that it's okay for you guys to have different options when it comes to lending, right? You shouldn't have just one loan officer, right? You need to have a couple, and let the client know, the borrower, hey, I work with a couple of partners on the lending side that is gonna help you. And the reason why is because if maybe that loan officer was not able to help that client, sometimes the realtor has a hard time transitioning because they sold that loan officer, right? With all the whistles. And then that loan officer was not able to come through. And then you feel like, oh my God, now I'm losing the trust because I told my borrower that, we were able to help them. And then this loan officer is saying no, right? So in order for you to transition easily, just tell the client, I have a couple of lenders that I work with, are amazing. Don't worry. If one is not able to make it happen, I have other options for you. And that way, you have options to provide to the client, and have more than one loan officer. Don't just have one, because there's so many programs, so much information out there. It's hard even for loan officers to know it all. The same as realtors, right? You got land, commercial, a whole bunch of, type of, different properties, right? And the realtor specializes in certain things, doesn't know it all from the beginning. It's the same in the lending world, right? Not all the loan officers know it all. So you need to make sure you have a couple that, you can trust, that you build a relationship, because one bank might not offer, but another bank might have programs that will work for your client. So just have options. And I'm gonna text my information, of
All right,
course.
type it in there, because I want to leave off really quick for everyone to kind of this week kind of choose one area to improve. Whether it's starting that money conversation early, asking a better questions. Think about, have reflection in regards to your when you meet with clients. Am I simplifying or complicating the process for the buyer? So schedule a learning moment with your lender. It's good, like Carolina said, to have different options. She has multiple options of loan officers as well that deal with many different things. So she definitely has a lot of options in regards to lenders, and all loan officers, Spanish, English, and what else? You got different other languages aside from Spanish and English?
Well, we also have some French, especially for
French?
my French Canadians. We do French as well. But yes,
Okay,
and we have
awesome.
all type of loans, weird loans. So that's why I don't turn clients away. Let us talk to your client, and let's make a plan.
All right, awesome. Thank you so much, Carolina, for coming on this morning, and joining us today and talking about the money conversation. So thank you so much.
Thank
Thank
you,
you
thank
for
you
having
very
Thank
much.
you,
me.
Carolina.
Thank you,
Bye,
everyone.
everyone.
Please learn one thing I take it away for this: do not shop for your packet, please. Just take in consideration everybody has a different budget, and that we're here to help each other out. Any question, please let us know. We bring in as much of value as we can on our Mindset Monday. And don't forget, we had Leadership Friday this Friday at 8 a.m. Now we're gonna have Mindset Monday in Spanish at 9 a.m. So thank you guys for being here today. See you guys soon.